is Xero getting caught up in this tech sell-off? Or was there something about that deal that investors are not liking?
I think the deal is an amazing deal, and it is consistent with their strategy. The share price come off is mainly because of the tech sell-off, and share price has underperformed by pretty much, I think it fell close to 40% in the past couple months. So it underperformed a lot. It has made a great acquisition, consistent with the plan. It is a business that has pretty much dominated the accounting software space here in Australia and New Zealand, and gone to UK that has done very well there. Looks like it will have a very dominant market share there, and even US is making good inroads now. Its strategy is to become not just accounting software but a platform for SMEs. And on that basis, they're making the right acquisition, which is a more payroll system, and then that will broaden out its product offering to the customers where it's already have dominant share in the accounting software. So our view is that it has increased its growth opportunity, and this tech sell-off is providing great opportunity to be buying this stock.
So at $114, you would be buying Xero. You wouldn't be waiting for any further pullback?
Look, you probably wouldn't buy 100% of your entire holding today, but certainly you'll be building a position from here on.
Claude, so this platform that we'll see Xero push into Europe in a more significant way comes after a big cap raising that was done late last year. There were questions at that time. What was Xero going to spend it on, because they hadn't done a meaningful acquisition in quite some time. So do you see this as a start of an M&A cycle perhaps for Xero?
It's almost as if you read my mind. So what they did is they raised capital very cheaply, which is just a testament to the strength of their business and the willingness for investors to say, we think that this is good business, it's going to be around in 10, 20 years. And so they can raise capital cheaply. Now, I think I'm not as bullish as Junbei on this particular acquisition, just because I feel like they paid a high price at a heady point in the market. But on the other hand, they can afford to and still create value when they can raise capital through convertible notes so cheaply. So if this even has half the strategic rationale that Junbei thinks it does, and I think it almost certainly does, then I think it'll work out well for them. And what's more, to your question, I think we will see more acquisitions, which is also just a feature of the fact that Xero is now a more maturing business. So it's already moved over break even. It can use its platform to really start rolling up other companies with synergies, as well as just the organic growth that we've seen get it this far.
So same question to you, because it's all about buying on the day, isn't it? Junbei noted that it has pulled back over the past while. It's currently at about $114. We are talking about that narrative of more steam potentially coming out of tech names. And sometimes when we see that happen, it's across the board, right? It's not necessarily picking the bad from the good. So would you be comfortable buying Xero today, or would you, perhaps wait to see if there's a further pullback?
I would wait for a further full pullback, and I'll tell you why. I think the price got very heady in Xero, very, very heady indeed, above $130. We saw the founder and another director selling shares at that price, and also it just benefited from this massive Momo rally in all of the tech stock names. Well, guess what? Xero is probably the best quality tech stock, second best quality tech stock, sorry, Pro Medicus, on the ASX. And so why wouldn't everyone want to buy it when there's that Momo? Everyone buys it, everyone piles in. All of these names are going to come down now, and I think that Xero will come down a little more. But I'm a holder, and I'm certainly not selling. And if it gets down to about $90, I reckon I would buy more shares. So I'm waiting for a little more of a pullback at least. But I just think it got too expensive, and that's not the fault of the business. This is a great business. I intend to be a long-term holder, and I would like to build my position. But hold now.
So just a point on about, being tactical about timing of when to buy those really high quality businesses. So one example is that Claude talk about, I'm waiting for the share price to come back. A lot of people are waiting on the sideline, waiting to buy those stocks. So you just don't know, where that floor might be. And it could be tomorrow, it could be in a week's time. So often for a long-term investor, you've got to be a little bit more strategic, because in 5 years, the share price is higher than what it is today. Mm-hmm. Or even in 2 years, the company will be a whole lot larger, because the way they've been growing across those businesses or the acquisitions they're going to make. So, it's really about just, taking advantage all those sell-off, and maybe don't get set in one day, but you can just start building positions because you just don't know which is the day that's going to turn.
Yeah. All right. Well, I'm glad I asked about Xero. I hope our viewers enjoyed that one as well. Seemed topical to me. Let's get into the company.
Look, to me, it is pretty good value for the growth it's going to deliver, and it's got a long runway ahead of it as well.